Ladies and gentlemen, federal employees, while you're working, the TSP is pretty simple. You just stick money in there, you pick how you want to invest it, and it grows over time, and you really don't have to know very much to do a decent job. But in retirement, the game changes, and certainly taking money out or knowing what to do, how to invest, how to withdraw, where to put the TSP, or how to do all of that in retirement gets a lot more nuanced. And one of the options you have within the TSP is to turn a piece or all of your TSP into an annuity. Now, this option gets tons of questions, so we're going to talk about it today. And we're going to also talk about, if you did it, what the options actually look like. Like if you did it, what you can pick. There's different options of annuities. And whether annuities make sense for most people at all, the pros and cons, all of those things. Now, if you're new to the channel, welcome. If you're a federal employee and you want to have an awesome retirement, you're in the right spot. We talk about your retirement, your benefits, so you get the most out of all these things. Let's dive in. So let's define what an annuity is. So many people, when they hear annuity, especially federal employees, they actually first think about their pension, right? That monthly check you get from the government because you worked with the government for however long. It makes you eligible for retirement, aka a pension. And it's sometimes called an annuity. But what we're talking about today is not that, okay? It's not that fixed income you get from the government. This is an annuity that you can purchase with your TSP funds. And actually, you can go to most insurance companies out there that are large and buy annuities. It's a financial product that you can buy. And this is the concept. You hand money over to the insurance company. Let's say you give 200 grand. And in return, they guarantee a monthly payment. So for example, you give 200 grand. They say, okay, great. We'll give you $1,500 a month for the rest of your life. And if you die tomorrow, they keep most of your money. If you live to be 120, they actually probably pay out more than you gave them, right? That's how it works, is they take all of the risk. If you live a long time, they eat it. If you die early, then they keep it. You basically are passing the risk off to them, saying, hey, I don't want to manage this. I just want a guarantee of a monthly income, a certain return, whatever it may be. Here it is. That's what an annuity is. And here are some of the options within the TSP. You can do single life, meaning it will only last for your lifetime. Then when you pass away, it's gone. There's also joint life, which is, of course, your lifetime and then someone else's lifetime. It can be a spouse and it can be someone else as well. And as you can imagine, the younger your spouse or someone else is, the less you're going to get per month. For example, if you're 60 years old and your spouse is 40, then they're not going to be willing to give you as big a monthly payment if your spouse would have been, let's say, 60, your same age, right? Because they crunch all the numbers, say, okay, based on their life expectancy, what can we afford to pay out on a regular basis? And so you can, if you're interested in annuities, you can talk through with the TSP all these options so that you know how much roughly you'd get based on how much you actually turn over to them. Now, MetLife is an insurance company, and they're the insurance company that currently has the contract to provide these annuities for the TSP. So if you go through the TSP, it's MetLife who is providing this annuity. And again, in a nutshell, annuity is you hand money over. In return, they give you a guaranteed monthly payment for the rest of your life or potentially someone else's life as well. Now that we understand the core idea of how this works, should you do it? Should you do it? Now, let me summarize it for you, and then I'll get into some of the reasons why. The summary is no, probably not, okay? For most feds, they don't need an annuity. They don't want an annuity. An annuity is that sort of product that is rarely sought after. It's most often sold to people. There are lots of financial advisors, and I'm doing air quotes for those on the podcast, financial advisors, where all they do is sell annuities. And so all their advice happens to be pushing people toward buying annuities because the commissions are fantastic. Okay? Long story short, if you're talking to one of those, be careful. I'm not saying they give bad advice per se, but if you only have a hammer, everything looks like a nail. And most feds are not nails. Most feds simply don't need this. And let me explain some of the reasons why. Okay? Now that I summarized that no, you probably shouldn't, why? The reason why is because we all in retirement, it's very helpful to have two types of income. First, fixed income, like your pension, Social Security, the income that is going to be there no matter what. No matter what the market does, that money is there. It's nice to have. But also, flexible income, investment income, your TSP, things that you can change over time. It's flexible. Because guess what? Let me give you an example. Let's say you take all of your TSP, turn it into an annuity. Well, you get a guaranteed income source, which is nice, and you don't have to worry about managing your investments, which is nice. But what if your life changes? What if you get cancer? What if your spouse gets something? Or whatever. There's so many things that come up. Or maybe your kid, one of your kids gets in a hard financial situation, and you don't have the investments, the cash to help out. You don't have the flexibility because you gave that all away when you bought the annuity. An annuity, you buy a guarantee, but you give up options. You buy a guarantee, but you give up flexibility later. And retirement's a long time. You don't know, none of us know what the next 20, 30 years of our lives will look like. And making a decision that will lock you into something for the rest of your life, I don't care what that decision is, I would be wary of it, okay? So that's number one, you lose control and flexibility. That's one reason why I don't recommend it. And most federal employees have a lot of fixed income, right? Most federal employees have a federal pension. You have Social Security. You may get the first supplement. If you're a military vet, you may have VA disability, a military retirement. Most federal employees, especially if you're married to a Fed, you've got fixed income coming out the wazoo, okay? Most of you don't need more fixed income. Most of you need flexible income that you can use it to ride the waves of your retirement, whether up or down. You've got flexibility. You've got some money that if something comes up, boom, you can actually afford to pay it, right? So those are my thoughts. Again, if you want to get an annuity, by all means, go get an annuity. Don't let me talk it out. Because sometimes I have seen situations where annuities have been helpful when people really don't have don't really have pensions or something like that. There is some reasons to do it. I don't want to say annuities are bad because they're not inherently bad. They're not. But in my experience, for federal employees, they just don't make much sense, okay? But these are the options. I hope that's helpful, and I'll see you guys in the next video.